The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Monday morning. I'm Tommy O'Brien coming to you live from TFNN just after 9 a.m. Eastern Time as we come into the trading week, and it's a big one, folks. We got a Fed meeting with an announcement Wednesday at 2 p.m. Eastern Time. We get all the big tech stocks, their earnings coming out this week. We also get some important economic data. We kick things off. You jump into it with the S&Ps right now up by about 0.33%. You're up 13 points at 39.78. You were as high as almost 39.90. You see that acceleration beginning at about 3 a.m. Eastern Time in our markets. You jump over to, in terms of Europe right now, you have the DAX up about 1/3%, FTSE up about 0.2%, CAC roll up about 0.4%. Our S&Ps pretty much right in line with that, right? Up about 0.3%. NASDAQ 100, you're up 0.2% right now, trading at 12,453. The Dow is up 0.4, 32,004 this morning on the Dow, just off the highs of Friday, 32,193. Bitcoin trading a little bit lower from Friday. You trade lower into Sunday, into Monday, 21,995. Crude up $1.39. Volatility in the crude market going nowhere right now. You got crude at $93 just 5 hours ago. You trade up $3 and more than that, even 96.04 in crude. You get the gold contract down about $5 at 17.22 this morning. And we jump to notes and bonds with the Fed in focus this week. You're talking about lower price and higher yield coming into Monday. The 10-year negative by 9 ticks. And we're sitting right now, where are we to see? 2.83%, I believe we're at, as I pull it up. Let's get the exact, 2.834. So 2.83%, the yield on the 10-year. All expectations are 3/4 point for a hike on Wednesday. Going to be a lot of speculation. We get a lot of economic data in terms of earnings and economic data. We'll get into that soon. And where do we kick things off? Let's jump it off with the 3/4 basis point hike. Fed to inflict more pain on economy as it readies big rate hike. Recession seen as increasingly likely as Fed fights inflation. So we get that decision on Wednesday. A Bloomberg survey and economists this month put the probability of a downturn over the next 12 months at 47.5%, up from just 30% in June. And we'll see where we go from there. You're going to have divergence on Wall Street, though. Morgan Stanley, they see more Fed hikes, while J.P. Morgan expects a pivot. The Fed's likely to continue tightening into a recession. That's Wilson from Morgan Stanley. J.P. Morgan says bets of peaking inflation may prompt a Fed pivot. It's going to be really difficult to see how Chairman Powell would pivot before he really has some data that's indicative that inflation has passed, and we are certainly not there yet. I mean, there is nothing that I can imagine that the Fed has to say, and I shouldn't say that because I was going to say nothing except for, but you're talking about, yeah, we have some lower crude prices. Undeniable that gas is not as expensive as it was, even if gas isn't tied exactly to the price of a barrel of crude. So you have gas. You could say you have some energy. I saw over the weekend, though, I mean, the port, there was some type of deal between Russia and Ukraine, right, to ease some of the ports, maybe get some of the food, the grains out of there. I believe that port was being bombed yet again. That, always a risk. So you have those food and energy prices. But, man, beyond that, we got inflation that's raging. There's undenying facts that have to do with that. So we'll see what Chairman Powell has to say. But I imagine they're coming with 3/4 point. And I imagine they're going to say, we need to see data before we pause. How are they going to pause with where we are right now? The S&P is still sitting at 4,000, folks, you know. So some important context as we come into a Fed meeting thinking about, the Fed, they're destroying the economy. Right, let's back this up just a little bit for some context here. I mean, I was doing this at one point in my newsletter. And when was it? November of 2018, I think? Let's see, where are we? No, November of 2016, when Trump got elected. Just talking about how good things were going in general. You had the S&P folks sitting at 2,200. We were elated, right? Democrats would say Trump was handed an economy that had already gone from 600 and change to 2,200, had been on a bull run since March of 2009 at a price of 6,600. You come into 2016, it's an all upward trajectory that carries even further with tax cuts. Point being, folks, November 2016, we were sitting at 2,200. We're sitting at 4,000 right now, and inflation is raging out of control. As long as that number is existing in terms of the inflation at 9.1%, the Fed's going to have to see data that lines up with it, and the data is just not there yet. So I would not expect any type of wording of pivoting, of pausing, of lightening. I just don't see it right now, man. The economy, it seems like it's a tough deal handling these types of interest rates, but you just saw the yield on the 10-year go from 3.5% to 2.83%. That's 0.75 of a percentage point that just went down on the 10-year as we have inflation raging. You got jobs open, and earnings are coming in okay right now. You know, they came in okay last week, but man, this one's going to be a big one in terms of earnings. All right, let's jump around to some of the companies, and we have more than just the big dogs out there coming out with their numbers. But let's jump over to AMZN, Amazon, and Apple are Thursday, I believe, July 27th, 28th. Yes, Thursday. So Amazon and Apple are Thursday. Amazon. Now, these are the numbers as of last Friday. You're talking about potentially an $8 or $9 move for a $122 stock. You pull up Apple, the volatility they're expecting, only about a $4.66 move for a $154 stock. We get Microsoft and Google on Tuesday, I believe. Let's jump over to the Analyze. Yes, Tuesday. So we got Microsoft and Google on Tuesday. Microsoft, about a $10.82 move for a $260 stock. Google shares, you're talking about a $6.63 move for a $108 stock. They're Tuesday as well, and we'll jump through some of the other ones, but we got a plethora of earnings coming out this week. And you get the market opening in positive territory to kick things off. Back to a short-term time frame. But man, we got a lot of volatility to get through. It seems like this is a tough week in terms of, best case scenario, the market stays where it is, and maybe you exhale with a sigh of relief. Worst case scenario, inflation's raging, the earnings of the big tech companies aren't as encouraging as they could have been, and you have the Fed not giving any hint of pausing until inflation is under control. So we'll see where we go from there. But you have a divergence already with two of the big banks on Wall Street, with Morgan Stanley seeing more hikes while JP Morgan expects a pivot. Morgan Stanley strategists say it's too early to expect the Fed to stop tightening its policy, even as fears of a recession grow, suggesting stocks have more room to fall before finding a bottom. JP Morgan says bets that inflation has peaked will lead to a Fed pivot and improve the picture for equities in the second half. Bets that inflation has peaked. It's a very real deal. We're 300 plus points right now off of the lows that we made not that long ago. As in optimism out there for sure. But we're coming into earnings that decide it all almost, and we're coming into some economic data as well. Just to get into some of that economic data on Friday, okay? Core PCE price index for June. PCE price index for June, of course, you get the core number, you get personal income, personal spending, consumption, okay? You get the University of Michigan Consumer Sentiment Index. All of those are huge numbers for the Fed, right? How about retail inventories coming out Wednesday as well? Durable good orders on Wednesday. You get the Fed announcement at 2 p.m. Eastern time on Wednesday. Look at all these numbers. Stay tuned, folks. We got 15 minutes till the opening bell. We'll be right back.
Vista Gold owns and operates the largest undeveloped gold project in Australia, the Mount Todd Gold Project. Vista Gold just completed their feasibility study, resulting in a 7 million ounce gold reserve. Vista Gold has all major permits approved and has retained CIBC capital market assistance in evaluating alternatives and in completing an accretive transaction. Vista Gold trades on the NYSE American and TSX under the ticker symbol VGZ. Vista Gold, executing a strategy to create shareholder value.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We get the S&Ps up by 10 points right now. NASDAQ up by 17. The Dow up by 108. So I'd walk through some of the economic numbers that we have coming out this week. You almost can't overstate how big of a week it is in terms of the biggest companies in the world reporting their earnings. The Fed coming into a meeting that they're expected to hike by another 75 basis points. Okay. And then you have, on top of that, core PCE on Friday. You have personal income, personal spending, consumption on top of it, and then you get the University of Michigan Consumer Sentiment Index, which they cite as well as a very important data point for what they're looking for. So here we go. We got 12 minutes until the opening bell as we come into that. Now, this is going to take them, I think they say it up here at some point. Yeah, so if the Federal Reserve hikes by 0.75 of a percentage point this week, that is going to take our interest rate from near zero, less than 5 months ago, to a range of 2.25% to 2.5%, a level in line with most officials' estimates of the long-run neutral. That's the argument of some type of pausing there, just to put it all out there, right? The Fed has told us, though, that and this is my though I added, they are unlikely to let up on the brakes until they see a convincing shift in the trajectory of monthly inflation readings that would signal progress towards the Fed's 2% target. That's PGIM fixed income lead economist Ellen Gaske. We expect Powell will likely reiterate that message at his post-meeting press conference. I would say the same. I don't know how you would do anything differently. Because at this point, they've been very adamant, even undersized, and they've come with hikes that were ahead of what they forecasted, saying we're going to follow the data here. We're going to have to wait until this data says that inflation has peaked, and we're not even close to that. So keep it in mind. Even if you're looking for the Friday data we get with PCE, personal income, personal spending, that's after the Fed meeting. Okay, we're going to get a couple companies with earnings. We'll get Microsoft and we'll get Google earnings, among some others, on Tuesday. But don't expect that to play into the Fed when you have so much economic data that points to inflation just raging. Now, I talked about the the economy in terms of what they have coming out. We talked about the big companies with their earnings. Okay, the two of them, the biggest, Microsoft and Google on Tuesday. But look what else we get here. All right, just huge numbers. I wonder what the percentage is. I mean, it's probably like something like, 1 out of 4 companies or 1 out of 5 companies in the S&P report this week. It is a monumental week. Not even on the headline, you got Coke, McDonald's, GM, Chipotle, right? Mondelez, UPS, Texas Instruments, GE, Raytheon, Archer Daniels Midland, Kimberly-Clark, Albertsons, Boston Properties, First Energy, Visa on Tuesday, okay? Wednesday, Facebook, Meta, Boeing, Ford, Etsy, QCOM, T-Mobile. I almost chuckle at so many companies coming out, going through the list. All right, you can look these up as well. Thursday, Apple and Amazon, Pfizer, Honeywell, MasterCard, Comcast, Intel, Roku, Merck, many of these companies, Harley-Davidson, Southwest. Friday, AstraZeneca, Sony, BNP Paribas, AON, not familiar with AON. Nonetheless, huge week of earnings, huge week of economic data. We kick it all off. And from a risk parity standpoint, right, you take a look at the S&P here. What's your upside? What's your downside risk? I'm always trying to consider that, right? Larry Pesavento, he has a great phrase. Don't think about what you can make. Think about what you can lose, okay? Seeing this chart, you go back to the beginning of the year at 48.08. You go back to 4,600 April 1st, which is remarkable. You go back to 4,200 June 1st, June 2nd, whatever it be, okay? We've now accelerated 340 points about to the upside from where we were June 17th on the low. This market gets up to 4,100, 4,200. You're going to be bumping into the highs of early June. You're also going to be bumping an area of support that could turn into an area of resistance, as in that bounce that we got on March 1st, also the area that you were at in early February, also right near that first acceleration down, right? 42.12 is the low from January 4th. So you're talking about 240 points to the upside from where we are right now. That's about 5%. That would be an area that if this market is able to gain strength up to 4,200 or so, I would be very skeptical of that area, folks. I don't see this market clawing back 4,400, 4,600 with everything in play right now, okay? Even if the inflation starts to wane, and even if the Fed starts getting some economic data that they may be able to pause, even if it's not next meeting, even if they just say, you know what, we don't need 75, maybe we're going to go quarter and then pause, whatever it be, if they start getting those headline numbers for CPE, maybe Friday is the first indication with PCE, I just don't see it being that high. Vice versa, 36.39 is well within play. If some of these numbers that come out this week for all the earnings that we're getting are not as exciting as we may have thought, maybe the Fed is pretty adamant that they need to see an actual decrease of inflation before they pause with hikes of 75 or maybe 50 basis points. So you have some risk to the downside in a big way. All right, let's jump around to some other stories. This one just popped up, and this will be interesting. I like the streaming sector. Disney's gotten walloped in a big way, but there's nothing like live sports right now, and this will be an interesting one to see how it plays out. So the NFL's new streaming service, NFL Plus, launches at $4.99 per month. Now, this is out-of-market preseason games. Boy, you got to be an NFL fan, man. If you're watching out-of-market preseason games, I understand if your team's out of market, I'm in Florida, I could watch the Patriots. Preseason, though, folks, you're barely seeing the starters, right? I guess you got to be a diehard. It's only $5 a month for what it is. I was a little confused with how they worded this as this popped up this morning. So it's $4.99 per month, but then they say, or $39.99 per year. But this gives you access to all out-of-market preseason games, which was formerly only available with the subscription to NFL Game Pass for $100 a year. Why am I signing up for $40 for the year if I'm getting preseason games at $5 a month? Wouldn't I just sign up for a month or two or even 1 month, right? Isn't preseason basically 4 weeks that you could sign up? Preseason kicks off August 4th with the Jaguars facing the Raiders. Since that will be a nationally televised game, it won't be featured. Now, what's really interesting is how this gets into things is that when you look at, there's nothing like the NFL right now, folks, in terms of the top-rated television programs. I got to go back and figure it out, but almost all of them are live sports. Almost all of them are the NFL games in some capacity and what they get. Maybe it's the Monday Night Football. Maybe it's Sunday. I think it's Monday Night Football, maybe. Maybe somebody in the den can let me know, but they're all usually NFL games in terms of what they do. So the NFL's in the process of renewing its Sunday ticket package, and it's going to choose a streaming partner, possibly Apple or Amazon, or I think Disney is in the mix as well, because I pulled up the article about this from earlier this month. Now, that package costs $300 per month and offers access to all out-of-market games on Sundays. DirecTV has owned the Sunday ticket rights since 1994. 28 years have gone by, and DirecTV is the only provider that you could get NFL games out of market, all of them that you wanted. And you could only do it with a DirecTV package, okay? $300 a month, my God. But I guess you're only paying it for 3 months out of the year, 4. It's still $1,200 to watch all those games. It's a pretty cool service when you think about if you want just the complete action. I wonder what that's going to do to DirecTV, because, man, if you could only get that sign up for DirecTV, I bet that really drove things, because I never even considered it, and I wonder what it's going to do for the appeal of that service now that you don't need to be with DirecTV. Now, we're going to come back. We're going to take a look at the open. We'll see how the market's open. Then I'm going to jump back to this, because this is going to be an interesting one. And whichever company gets these rights, I imagine no matter what they pay, they're going to trade higher, man. There's nothing like the NFL. Stay tuned, folks. We'll be right back.
Of booming inflation, where your purchasing power is eroded, there's no better place to protect your hard-earned money than in gold. Vista Gold's flagship asset is the Mount Todd Gold Project in the Northern Territory of Australia. This is Australia's largest undeveloped gold project. We are talking a world-class gold project in a Tier 1 mining district. This is a large-scale, low-cost project with significant existing infrastructure in a politically safe and friendly mining jurisdiction. Vista Gold just completed the Mount Todd feasibility study, which resulted in a 7 million ounce gold reserve and a 16-year mine life. All of this, combined with the approvals of all major operational as well as environmental permits. This distinguishes Mount Todd as an attractive, de-risk partner, ready development stage gold project. Vista Gold trades on the New York Stock Exchange under the symbol VGZ.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. You're looking at all the markets barely in the green right now to kick off trading. You got the S&P right now up by 7 points. NASDAQ hanging on to gains, but barely up by a quarter of a point right now. 12,423. We did go negative for a moment on the open of the NASDAQ. The Dow leading the way, up about 0.3%, up 80 points. The Russell up by 5 points at 18.12. Crude up $1.50 at 96.21. We get the gold contract negative by $6. Gold kind of bouncing into the area that you had Sunday night, also into the area that you had towards the close of action on Friday. We were up as high as 17.38 on Friday in the gold contract, and we jumped to notes and bonds. A little bit of lower price and higher yield, but man, you cannot overstate the move that we had from Thursday to Friday, folks. 3 full points in the 10-year. That drove the yield down to about 2.75% right now. On Friday, that was, excuse me. We're approaching 2.85% right now at 119.17. Okay, jumping back to the article, talking about, oh, where am I? Don't tell me I closed you down. Did I? Oh, I think I did. I'll have to pull it up as I was jumping through it. But it was talking about Disney. It was talking about Amazon. It was talking about Direct Ticket. And the point was $300 a month. So these companies, that rate was $1.5 billion a year. The NFL now going to look for about $2 billion plus for that deal. Whatever service has that. Now, what they also talked about is that the rights that the Fox has and NBC has for their cover, CBS, I think was what it was, actually has for producing their NFL shows. Direct Ticket cannot be less than about $300 a month. So you're not going to see Amazon purchase that and then offer it as a part of Prime. You're not going to see Disney purchase that and offer it for a very affordable price. Whoever buys those rights, that price is locked in at an extremely high price point, probably making sure that the networks that are buying the rights to air those games in those markets doesn't actually lose out to all the people signing up for that service as opposed to watching it over television. Nonetheless, it'll be interesting to see how it plays out. And I imagine no matter what they spend, there's nothing like the NFL. And the fact DirecTV has had it since 1994, folks, they're going to make a decision on that by the fall. It's about to be August. You're going to get a decision for Direct Ticket. It's going to go to Amazon, Disney, or Apple, right? Disney incorporating ESPN. Don't forget that. That's a big part of what they have there to incorporate it. You get ESPN. Maybe that ramps up the ESPN app in some capacity. I don't know how, if you have to pay $300 a month. It'll be interesting to see how it plays out, but we're going to find out pretty soon. And don't underestimate the power for that to shape how these companies go when that is a product that's been under DirecTV for 28 years. I almost can't believe that. In terms of how the landscape has changed in streaming, how NFL has been so dramatic, and it's taken 28 years for DirecTV, a company like DirecTV, which in my opinion is inferior compared to many of those companies it's competing with, and still they've held on that long. Now, they're not bidding this time around, but somehow they're willing to work with whoever wins that bid, and so maybe they'll offer that service to people who are not only DirecTV subscribers, but meanwhile DirecTV subscribers can still access it in some form. That's up in the air, of course, depending who wins it. We jump over to some of those companies I've been talking about. Disney, down about 0.5% to kick off trading this week. Amazon, they're up 0.9% as we come into their earnings on Thursday. Remember, the two companies with the A, they're Thursday, Amazon and Apple. Microsoft and Google, Tuesday. Meta, Wednesday. We'll jump to all of them. So Amazon, you're going to jump positive to start things off. Google shares getting a lift. How about that? Up about 2% to kick things off. Meta shares, basically flat. Microsoft shares up about 0.3%. Apple shares up about 1/3% to kick things off. Markets, they all turn red right on the negative open. Pretty interesting. They all turn red because you look at the big tech stocks that are coming up. They're actually all in the green. Amazon's up 0.7. Apple, the biggest company in the world, is up 1/3%. As I just said, Microsoft's positive. Google's positive by 1.6%. Meta's flat. All those companies flat or positive in all the markets. Barely red, though, by about 2 points right now. Okay, jumping around to other articles I had pulled up. Let's see. Well, we'll talk a little bit of earnings since we were. Goldman Sachs, they're pretty optimistic. They see, they cut earnings outlook. Oh, no, that's talking about China. Excuse me. Where was I looking? Hold on. I'm going to give you a little bit of optimism here. From Citi and UBS, not from Goldman Sachs, though. Citi and UBS Wealth says earnings holding up better than feared. Citi expects upbeat earnings to support stocks in the second half. We're going to find out a lot this week, folks, man. Pay attention and be quick, because I feel like we're at a pretty lofty level with so much volatility coming into things right now. It might make sense to buy a little bit of insurance throughout this week if you're a little worried with where these markets can go. But Citi and UPS, they're optimistic. So far, that's been the case. 60% of companies so far have beaten sales estimates, and 75% have topped profit expectations. That's the important part in this market right now, folks. We saw these companies get absolutely punished last go around, right? Amazon, I mean, let's pull it up so we can remember what happened, which is why I'm kind of saying, hey, we're coming in at about 4,000 right now. Do you remember what happened the last time these companies reported? There's Amazon, folks. Okay, where are we? We're basically back to just the lows of that day that they reported. Now, you continued to trade lower. We are at the upper boundary of the consolidation area we've been in since their last earnings. Kind of a dicey area to come into things when they've actually already warned this one may be a tough one, which is why things accelerated so much lower. Let's jump over to Google. They may have some problems with their ad business, right? Last go around, they were trading at 122. You open, and we were at about 113 following their last earnings. Google, not quite near the upper boundary of that consolidation, much more so near the bottom portion. Apple's held up really well, man. Look at Apple, right? Where are their last earnings? Let's see. Last earnings, they didn't get hit as hard as everybody else, but we've basically clawed back all the losses. Just get back to where we were in the last earnings. Apple's held up very, very well in this market. Meta, not so much the case, man. Now, you know what's going on here. I think, where are their last earnings? Maybe that was it. What's going on is because of the symbol change, they don't have the earnings marked down here as they normally do. Let's jump over to Microsoft. Yeah, they had actually some decent earnings. Remember, Microsoft was one of the limelights last earnings go around. Meanwhile, Microsoft, just in the same exact territory, 260 down from there. All right, let's jump around and see what else I had pulled up here. How about Tesla? We had Tesla up in the pre-market. Let's see if they're continuing that trend. Let's see how Tesla's trading before we jump into it. So they were higher. They give it up. Man, it's a quick give up. $20 from where you were at 7:30 this morning. You're at 810, down from 842 on Friday. Tesla shares boost capital spending plans and reveal new SEC subpoena. Well, you got a double action there. So they have new plants as quote-unquote money furnaces, according to Musk. They disclosed $170 million Bitcoin impairment charge. A lot going on in this company, man. Revised plans revealed Monday in a regulatory filing. Details of the electric vehicle maker's Bitcoin sales. This is the part. They expect to spend $6 to $8 billion of capital expenditures this year, and each of the next 2 years. Tesla had previously estimated it would spend between 5 and 7 on ramping up manufacturing facilities and items. They jacked it up by $1 billion, folks. They're going to spend more money. Tesla, the market liked that early on. But Elon's got some other news in there too. Supposedly he was sleeping with the wife of Sergey Brin. That's why they broke up over the weekend. Can't make this stuff up, man. Not sure what his deal is. And Tesla's paying a price, down 1.2% right now. Stay tuned. We'll be right back.
TFNN has been your trusted source of analysis for bonds, metals, stocks, commodities, and options for years. And we are happy to announce that we are bringing that same caliber of analysis for the Forex market. Teddy Keckstad has 30 plus years of experience in Forex trading, commodity risk management, Forex hedging, volatility, and so much more. Teddy releases his weekly Tiger Forex report every Monday morning with elite coverage of all major currency pairs, including the DXY, Euro dollar, Pound dollar, Aussie dollar, dollar yen, dollar Swiss franc, and so much more. Teddy will recommend specific trades when the market presents them and provide updates throughout the week when warranted. For the month of July, inaugural members to the Tiger Forex Report will receive 25% off the monthly subscription for as long as they're subscribed. Just use promo code TEDDY25 to lock in the added savings. This offer is good only for the month of July, so do not miss your opportunity to save on the Tiger Forex Report. TFNN, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got markets right now flirting with negative to positive action. S&P is basically flat at 39.65. You see the action. You basically give back everything that you did from 3 in the morning, right? You trade right back down to basically where we closed out the action on Friday. Forget about that acceleration to 39.90. S&P is flat right now. NASDAQ 100 right back down to the lows of where you were on Friday as well. 12,400 about. We're sitting 12,408 to be exact, and the Dow up by 27 points. Okay, wanted to talk about this article, and maybe this is some of what's shaping my skepticism and just talking about whether it's buying insurance, whether it's being skeptical, whether it's being fast with your fingers this week as we get some big companies, okay? This is not a Bloomberg opinion piece, folks. This is just a Bloomberg News article on technology, okay? It's out this morning at 7 a.m. And listen to some of the data they have in here when you just hear it, okay? Now, it's taken somewhat out of context in terms of how the stocks have already traded, that this information is already known. Okay, so it should already be factored into the stocks, plural. But here we go. Growth is sputtering across the tech world, even usually invincible companies like Apple and Amazon can't escape the slowdown. Now, let's get into some of this. Here's online advertising, okay? U.S. digital ad markets increased just 11% in the second quarter, a steep deceleration from the 58% in the same period earlier. These are the growth rates we're talking about. Look at where they were in 2021, and that is the U.S. digital media ad sales, slowing dramatically. That's the industry, okay? Growth will be especially anemic for social media ads, which have been hurt by Apple privacy changes that make it harder to target customers. Snapchat talked about that a little bit last week, but they also said regardless of the environment that they were not executing, meaning that it was more than just the environment. Meta is poised to report its first period of zero sales growth since the company's initial IPO a decade ago, along with a 33% decrease in net income. Alphabet, Google's parent company, expected to post its slowest sales increase since the start of the pandemic. Facebook and Google seem to be so much on the back foot right now. That's a general partner at some ventures firm. Things have started to shift really fast, but look at those, right? Zero sales growth for Meta, first time since their IPO. 33% decrease in net income. Google, their expected slowest sales increase since the start of the pandemic. Amazon, facing a historic slowdown. Hangover from the pandemic, okay? Profits taking a hit. Analysts, they're looking for 14 cents a share. Net income declining 82% from a year earlier. Profitability is expected to rebound in the second half of the year as Amazon slims down. They built out too quickly. Here's what I'll say about this one. And the last tidbit of good news, if you're an Amazon shareholder, if there's a full-blown recession, Amazon could still fare better than rivals thanks to its reputation for low prices, which sometimes is not deserved, folks. Do some price shopping on Amazon. If you've never heard it before, visit the site, pull it up. Camel.com. You enter any URL up here, and it gives you the entire price history of any product that's been on Amazon. So immediately you know, at least on Amazon, am I getting a good price as to how they offer it on Amazon, or am I getting a high price? It'll show you exactly when that price, you'll be able to see what the price of that item was during Prime Day, right? You'll be able to see how low they're willing to go, where you are. So do some price shopping, because that's not always the case. But nonetheless, thanks to its reputation, during the global crisis in 2008, the company grew faster than overall e-commerce industry. Yeah. For now, though, growth is slowing. Revenue projected to rise by 6%, the slowest in any quarter since 2001. If you just look at Amazon's online store segment, sales are expected to decline for the third straight quarter. I'm an Amazon bull in the long run, folks, right? But look at all these statistics. DoorDash and Uber, they talk about if you get a slowdown in the economy, how these companies, the gig economy, could really get hurt, okay? Delivery sales grew an estimated 23% at DoorDash last quarter from a year earlier, 31% at Uber. Still, order volumes are down from the COVID highs, and competition with peers like Grubhub and Instacart is intensifying. One thing I will say about these companies, man, the fees are really starting to get crazy. And in the long term, I mean, even like a company like Instacart, I used it all the time during the pandemic. I still use it occasionally with kids in the house. Sometimes very hard to find the time. But it is expensive, period, folks. I mean, you're paying about 10% higher per an item. Okay, so let's say your normal bill is $100 at the grocery store. Just per the items you add in your cart, you're talking about 110 maybe. Then you add on the fees, the service fees, the tip fees on top of it. That $100 order can maybe cost you like $140. You know, in this inflationary environment, some of these companies are really going to be hurt because it is harder and harder to rationalize spending that percentage amount of money on top of a grocery bill that is already escalating pretty dramatically. And that's where you may see some of these companies get squeezed, whether it's Uber Eats. Similar deal, man. DoorDash, very expensive fees. If prices are already very high, they may see some tough go around. All right, Target. This news out this morning. Interesting. So they're going to have bigger e-commerce profits with new delivery hubs and a fleet of drivers. They're opening 3 more sortation centers to cut delivery costs and get online purchases to customers faster. At the hubs, the retailer group's packages heading to similar destinations and uses contractors to deliver them locally. They open the first sortation center in Minneapolis and 9 after that. Now, I talked about that they save a lot of money if they're just shipping it from stores. E-commerce at Target, just 20% of their sales, with more than half of that coming from same-day services like curbside pickup. And they do save money right now if they ship it directly from the store. Where are we? I saw those statistics somewhere. Because they were pretty cool. And this is what they're going to try and maybe potentially change in terms of how they get around. But nonetheless, they're growing delivery hubs, and that's going to be, they're trying to compete with companies like Amazon, man. Very tough to compete with Amazon, folks. You know, I just look at our office is in downtown St. Petersburg. I was ordering something last week, a couple weeks ago, a new router for the office. And it was Friday. Okay, we had a cable guy coming on Sunday to look at our whole setup, try and solidify the internet that we have there to make sure that we have as few hiccups as possible for our streams and everything that we do, the production house that we have. And on Friday, I could order this router by 5 o'clock, and it was about noon on Friday. I'm looking at it, I'm talking with Jacob, we're trying to figure out what we need. And up until 5 o'clock, it told me if I order this router in the next 4.5 hours by 5 o'clock p.m. Eastern time, that router would arrive to me between 5 and 10 p.m. that exact night. So I was telling Jacob, I can order this thing at 4:59, and it's going to tell me it'll be here by 5 to 10 o'clock. Remarkable, right? Well, here's the kicker. We ordered it at about noon, too. I didn't push it, and it didn't show up. It got delayed. But it did arrive on Saturday, and the cable guy was not coming until Sunday, so it worked out. But even Amazon, rare disappointment there, but pretty remarkable when you think. I was amazed. You can order something up until 5 o'clock, and they're telling you it'll get delivered between 5 and 10. Bottom line is it didn't happen, so that matters in the context. But who else is doing that right now, folks? Nobody. You're telling me you can order something on Target at 4:30 in the afternoon on Friday and it'll be at your door somewhere by 10? Not even close. That's going to matter in the long run, no matter what happens in this quarter. If you have a longer-term picture on Amazon, man, I mean, you just had quite a run up, but in the context of where we are here, you could at least start to nibble because maybe the market gets ahead of itself. We find out on Thursday their earnings, longer term, it's been quite a run. That $100 area was probably a nice entry, getting back into basically 2018 prices, 102.53, 2018 prices, and we got to 101.43 and 101.26 in the last couple months. Stay tuned, folks. We've got one more segment. We'll be right back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We get the S&P positive by 4 right now. NASDAQ negative by 32. Dow positive by 95 right now. You're trading at 39.69. Interesting article out here on Bloomberg talking about the 60-40 strategy will make a comeback. Morgan Stanley says the classic 60-40 portfolio, invest 60 in stocks, 40% in bonds. Yeah, you're down about 17% in the first 6 months of the year. Quite a dramatic pullback when you think that diversification is supposed to protect you from pullbacks. But it doesn't take much to do that, folks. When you look at some of these bond performances, I mean, just look at Vanguard Total Bond Market ETF, right? Take a look at this thing on a 3-year weekly. from about 85 to 73 at one point. That is fixed income destruction of money. I mean, Fidelity's got a similar one out there. Many other bond funds, no matter where you are, man. You buy the 10-year, the 30-year, whatever it is, right? You take a look. That's the Fidelity one, down from 53 to 46. Absolute destruction in that market. At the same time, you had the S&P straight from 4,800 down to about 3,600. The one thing they do say, they don't make a real case for it, though, with enough data, in my opinion, is that let's see where the point is. He's talking about the best opportunity in about 10 years, maybe. This approach offers higher estimated long-term returns in the U.S. and Europe over the next decade than at most points over the last 10 years. That's Andrew Sheets writing in a note on Sunday. Take that for what it's worth. And, folks, head on over to the front page of TFNN. The Forex market is running certain parts of this. The bond market is running it as well. Please check out the Tiger Forex report, folks. This is the last week. Teddy's got a new issue that just went out this morning. It's a perfect time to sign up. In the 3 minutes you have from right now until the update at 10 o'clock, you can be signed up. You can be checking out the Tiger Forex report. Enter the code TEDDY25, okay? Teddy25 right there. You save 25% for as long as you subscribe. That's every single month going forward. If you stay on, you save 25%. Normally it's $97. That brings you down to $72.75. You still get a 30-day money-back guarantee, and it's just that week. I mean, come next week, folks, it's going to be $97 a month forever. This week, it's $72 and change. Still, with a 30-day money-back guarantee. Cancel it in 29 days and get a full refund. And I guarantee you'll learn something over those 29 days with a great report out by Teddy. All right, folks, stay tuned. We got our man Basil. He's back in the saddle coming up right now. Thanks so much, folks. Have a great Monday.